I recently came up with an extremely accurate Ihimoku Cloud strategy no one knows about. This is literally my own method and I haven't seen anyone using the Ihimoku indicator this way. This strategy is so powerful that it can generate you consistent profits in the shortest amount of time. And to prove how well this strategy works in different market conditions, I will also backtest it 100 times with an initial account size set at $1,000 with 1 to 1.5 risk reward ratio. Okay, I'm gonna do my backtesting on Ethereum 15-minute chart, and this strategy consists of only one indicator. And that indicator is called Super Itchy. This one by Lux Algo. Okay, we're not gonna change any settings at all, we're just gonna keep them on a default. Now let me explain what the main idea behind this strategy is. Okay, so the main idea behind the strategy is to first identify the direction of the trend. For that, we're going to be using an Ihimoku Cloud. If the price is closed below the cloud and the cloud is colored in red, we are officially in a downtrend. And to identify the short-term momentum in the price movement, we're going to be using these two lines. Unlike the regular Ihimoku Cloud, this indicator is composed of two lines or calculations and the cloud. This particular indicator includes a 9 and a 26 period moving averages. They called Tenkan and Kijin Sen. When the orange line is above the blue line, this means that the bears are controlling the market. And if the blue line is above the orange line, this indicates a bullish momentum in the price. There are multiple ways of using Ihimoku indicator, but not even half of them are profitable. So let me now explain to you how to trade with my strategy. Okay, just like I mentioned earlier, we're only going to be looking to buy if the price is closed above the cloud and the cloud is colored in green. Next condition will be to have a blue line sitting above the orange line and they both have to be positioned above the cloud. And the last condition will be to have a pullback where the price crosses and closes below the orange line and then it reverses and crosses above the blue line. Remember, none of these two lines should touch the cloud at the moment we enter the trade. So we will place a buy order at the close of our trigger candlestick. Our stop loss will be set at the recent lowest price. And we're going to be targeting 1.5 times the risk. We see the price easily triggers our take profit target. So we see the whole point behind this strategy is to enter a continuation trend when the price is making a retraction. Exactly opposite rules apply for shorts. So we first want the price to close below the cloud and the cloud has to be colored in red. The orange line has to be above the blue line and they both have to be positioned below the cloud. And lastly, we want to have a pullback where the price crosses and closes above the orange line and then it reverses and closes below the blue line. We see all our conditions are met and this is going to be our trigger candlestick. So we will place a sell order at the close of our trigger candlestick. Our stop loss will be set at the recent highest price. And the profit target will stay the same. And the reason this strategy is so powerful is because we go in with the trend, we're not catching the reversals. Now let me give you some examples where you wouldn't have entered the trade. So here we see the price is below the cloud is red, and the price made a pullback. But the problem is the blue line is above the orange line, so these signals are not valid. The same thing with this bullish signal. We see the price is above the cloud is green, we had a pullback, but the problem is the orange line is above the blue line, so we can't take this trade. Here's an example of a valid long trade. We see the price makes a nice pullback and the blue line is above the orange line. And this is the moment where we would have taken a trade. This long signal wasn't valid for one reason, the orange line was inside the cloud. Also take a look at how well this strategy is eliminating bad signals. We wouldn't have taken that long trade right there because the cloud was colored in red. Another thing I like about the strategy is that in 99% of the time you wouldn't take any trades when the market is consolidating, because the lines are either touching the clouds or the price is not making a pullback. We see this long signal wouldn't be valid because the price didn't close below the orange line. We see here we have a valid long signal. Also take a look at these two short signals, they were absolutely perfect. Okay, I hope you have understood the rules, so let's actually do our backtesting and see how well the strategy works in different market conditions. Okay, just finished the backtesting and here are the results. So the win rate for this strategy is 67% and we increased our account size by 272.01%. Because I was backtesting this strategy on a 15-minute chart, I found those 100 setups within 8 months. I also did a backtesting on a 5-minute chart and we're going to get into that in a second. But just take a look at the equity curve, it's really stable and consistent. The profit factor for this strategy is 3.05 and we had 9 consecutive wins against 5 consecutive losses. I believe this strategy could definitely be improved even more just by adding a good volume indicator. I made a video in the past about my top 5 volume indicators, go and check it out and pick the one that works for you. Okay, so on a 5-minute chart the results aren't that great. The win rate is only 61%, but that's due to the fact that the level of manipulations on the lower time frames is really high. And I found those 100 setups within 2 months. The profit factor is 2.35 and we had 7 consecutive wins against 3 consecutive losses. So this is the proof that strategies always perform better on the higher time frames. Okay traders, I hope you found this video useful. Don't forget to smash the like button, it really helps with the channel. And also if you want to see more strategies like this in the future, then feel free to subscribe to Tradingview.